The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. A solid turnaround Tuesday in the grain and oilseed trade, while we saw mixed to lower action in the livestock sector as we are starting to ramp up harvest season. We're going to be in the heart of harvest here relatively soon. Let's talk about all of that and get some perspective from Matt Bennett with agmarket.net, joining us from his home in Illinois. Matt, good to talk with you, my friend. And I got to ask, have you been out running the combine at all yet, testing some fields to see if they're ready?
Yeah, so we actually harvested custom beans Thursday, Friday, Saturday. We tried a little Tuesday, and they were way too wet. They actually tested 17, and then we gave it 2 days, and our first 5 semi-loads went between 12.2 and 13.5. So the beans that we started cutting 2 days prior dried down significantly. Now, I do think I might have been in a wet spot. I was on the edge of the field, and I'm not so sure that I didn't get my fungicide pass plus the neighbor's fungicide pass drift over a little bit, because they were definitely greener than out in there a little ways. But regardless, to get to, I think the crux of the matter, it was our first planted soybeans on black ground. Good yields. Okay. We're talking pretty close to APH. So Central Illinois, 75 to 83 is what we ran on our first 300 acres. In all honesty, Jesse, I'm very happy with that. I am a little bit cautious about yields on farther out, like May planted on lighter dirt. So some of our customers locally that have planted some light ground the same week that they started on their black ground, we're going from mid 70s down to beans that weren't making 60. So I do think soil types are going to play a big role this year, because we were so dadgum dry, at the end. Soil types. And of course, we just didn't catch any rain. So I think later May planted stuff may really suffer. At least on my farm, I'm expecting that.
Well, and I know probably too early to tell, but I think a lot of folks are going to be curious to see how much southern rust has affected corn. I know that's such a hot topic right now across farm country and within the market trade as well, Matt.
Yeah, and so I talked to actually not even a customer, just one of my cohorts customers that works with me at Ag Market. I text with him some because he's a guy out in Kansas, and he's a big K-State guy. And my son, of course, Bo, went to K-State. So
yeah.
We like texting back and forth about stuff. And he told me that his corn is running 50 to 60 below a year ago, and he thought that it was going to be as good or better. And so he said he didn't realize how bad southern rust had gotten him. And we've heard that a lot on the eastern side of Kansas up to like in the Omaha area. There's a lot of folks that, sprayed twice and they saw one heck of a response. But Jesse, a guy that sprayed once and spent 30 to 40 bucks an acre with $4 corn, good luck talking him into spraying twice. It's really tough thing to do. But clearly Mother Nature this year threw some wild cards at us. And I think a lot of us, including myself, learned a few lessons here that I guess if the weather calls for it, I mean, the only way to even come close to working our way out of this, of course, is with some yield. But I think all things said, yield is probably still a little too rich for my blood as far as what USDA came out with on Friday.
Well, and let's talk about that. I'd say Friday's numbers, it didn't feel like they were bullish by any means. I mean, we had a good close to the week, though. Monday didn't really follow through, but then here we are with a nice turnaround Tuesday in the grains and oilseeds. So we just marking time? Are we chopping until we get more concrete yield results here, Matt?
Yeah, Jesse, I mean, really, the August report was bearish. And then we rallied the corn market between the August report and the September report. That's not what I had on my bingo card. I'm glad, don't get me wrong. And then you come into the August report, and yes, yield came down, but just a kick in the groin, if you will, was acres go up again. I mean, and so between the two reports, you're looking at 3.5 million acres extra of corn that most of us didn't necessarily have on our balance sheet. Now, we'd heard rumblings that there might be a few more corn acres, but the August report, whenever it comes to corn or beans, ultimately was not friendly, because essentially what it does is it gives you a buffer zone, if you will, because they keep ramping up demand. Exports up another 100 million on corn. They keep ramping up demand to where if you start scaling back on yield, you've got the ability to pull some of that demand back out of the balance sheet. So, as far as the old crop situation goes with corn, yes, I think yield's too high still. How much? I don't know. I mean, that's a really tough call. But ultimately, if yield's 5 bushels too high, which is a possibility, that's 450 million bushels of corn production. But how high is too high when it comes to demand? I think feed and residual usage up at 6.1 billion bushels. That's plenty rich, in my opinion, first of all. Second of all, exports. While Brazil, CONAB said their crop size was going higher. One nice thing about what CONAB said is our exports aren't going up because we're going to use more corn domestically. With that being the case, you've got to assume that still with that big Brazilian crop, you're going to struggle to get to 2,975. So I think you can take some air out of the sails there too. So long story short, I think old crop is going to be plentiful in supply. I think that you're going to have a real struggle to chew through all this corn in the short run, but all eyes are going to be focused on 26 at some point. And you got to ask yourself, does the farmer really want to step in? Fertilizer, I'm telling you, if you use the same program in Central Illinois that you used, and it's this way most places, I'm just telling you exactly what I'm seeing on my farm. If I use the same program I used a year ago, I'm going to spend over $100 an acre more than what I spent on the 25 crop. And yes, you've got D's corn. What do we close today for? We're still pushing 470, 468 3/4, your spring insurance price from last year. Most guys will say, if you assume normal production, you can't make 470 work. Now we're looking at $100 an acre more in cost. So last thing I'll say before being too long-winded is that most growers I've talked to are backing off their fertility plan just a little, especially when it comes to phosphate, because you just simply can't pay for $900 phosphate and think that you're going to make this thing work this year.
No, and I think that comes back to just looking at your risk management. And a lot of folks, they're getting ready to harvest this year's crop. They might not really want to look at things because the prices stink and the input costs are super high. But now's not a time to be complacent, I guess. Sitting down and looking at the books or talking with a trusted advisor, just having some sort of a plan, I think is just going to be so important right now, Matt.
Yeah, I mean, we've got to have a plan. Okay. And so just one thing that I noticed, that one of the bigger processors in our part of the world, they widened basis on beans for this fall, which is something we've been talking about was going to happen, both corn and beans. But they widened basis for fall for cash bid. Jesse, if you held on to beans with this particular outfit, and a lot of them are similar, you could get 90 cents more per bushel to get out to next June, July timeframe. And so that's just an incredible disparity. And so I know a lot of growers say, man, I hate storing soybeans. You put them in the bin 13.5%, throw some air on them. You pull them out in the spring or early summer, and all of a sudden those beans are 10 or 11%. I get that. First of all, there are a lot of your newer bin setups are set up to run the fans whenever more moisture or humidity levels are higher, and you can keep that moisture level fairly close to where you want them to be. If you don't have a newer setup, I get it, but still, is 90 cents a bushel enough? Yeah, probably is. Now, the only thing you got to factor in again, of course, is going to be interest costs. So if you're holding on to beans, obviously, if you're not paying off an operating note that's 7 to 8%, there's some costs there. But I'm telling you, I think guys need to look at things a little differently than what we have in the past. Whenever you have such a absolute lack of demand right now, as far as exports go, I mean, these river basis levels are atrocious. You look at river levels. I mean, it's been so dry, that now you're below normal pool. And so what's that mean? Well, that means our beans are more expensive at the Gulf because we can't load barges fully if we continue on this path. And so, yeah, there's a lot of things working against us, but you got to talk to someone that can help you sort through, hey, what's a way we can lock in a worst case scenario here and still have some flexibility that if this thing turns around, you can at least participate to some point. So I think on corn, it's a very similar discussion. I'd like to have some ownership out to this following year after you weed through a lot of this old crop and you get into the discussion of what our acre is going to be, because I've got to think at some point you're going to have to ask yourself, can we satisfy demand for 26? Because demand is unprecedented. Even before USDA really raised up demand at 545 in August, and then you bring it up again this month. Even before all that, it was a record U.S. demand for corn. And so with that being the case, hey, if you drop acres back in the low 90s, what happens if Mother Nature throws a monkey wrench in? Now you're all of a sudden in a major quandary. So I think a lot of eyes are going to be on that. It'll keep the corn market at least with some level of support as you go throughout the year. You may have some downs, but I do think that it'll be good property on later.
Should ask you thoughts on the livestock trade quick, and then we'll let you go jump in that combine and start corn harvest. Kind of a mixed day, cattle, hog-wise. Any big notes for you in the proteins?
Yeah, I mean, one really interesting thing that I'm sure you noticed is that on Friday, the report was not friendly, and then the corn market takes off on a rally, and then towards the end of the day, cattle market just got smoked. Absolutely smoked. And part of that was, in my opinion, corn moving higher. A little bit of it was rumors that maybe we were looking at opening the border again, which I don't know about you, Jesse, but I think we're going to be a little bit laggard in that decision this time around. I think most people kind of quelled those fears over the weekend. Then you come in on Monday and boom, you skyrocket and take, feeders up $8, and obviously fats took off and went higher. I mean, the functionality of this cattle deal is that we don't have the numbers, and we aren't going to have the numbers for quite some time. And so from a fundamental standpoint, it's still quite strong. But you've also got that fund long that's continued to stay in place. And at some point, you've got to think, even when fundamentals are strong, you might see the fund step in here and say, hey, we've ridden this thing long enough in here. Now, I don't think the cattle market is just going to plummet. I just want people to at least have some level of risk management in here, whether it's LRP. I mean, there's a lot of different things you can do here. But assuming that you're not going to get a massive setback at some point is probably not a very good assumption.
Matt, anything final you'd add or reiterate for folks today?
Well, I mean, I probably won't be on for a little, for 3 or 4 more weeks. And so one thing I'd say is that this crop is going to dry down extremely quickly. Okay. And once we get into get our beans harvested, we're going to pick some corn today. Okay. We're going to try to pick a little bit here and there. But once we go back to beans and we go back to corn, we know that it's going to be 15% or below. I mean, it's just the way that we finished this year. So one thing I would urge everyone to do is just be careful. I mean, we're going to take a disc and probably a water wagon to everywhere we go. And I know not everyone's in the same boat as the Eastern Corn Belt, but we are so dry that field fires are a huge concern for us, first of all. And second of all, trying to get through all this without overworking, some of the guys who work for us. We are going to want to get the crop out quickly. Just please be careful.
Great thoughts, good things to think about and keep in mind. Folks can go to agmarket.net for more information. Matt Bennett, agmarket.net. Always appreciate the time, sir, and happy harvest season. We'll talk to you again soon.
Absolutely, bud. Thanks for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.